Hey, everybody, prepare for a huge, huge surge in inflation. Take a look at this article from CNBC. Trump floats more than 60% tariffs on China imports. If Trump wins, we're going to have a big bout of inflation, even worse than what we're seeing now. And remember, this inflation just didn't start in the last couple of years. This started actually back in 2018 when we first started seeing the tariffs go out against China because we do import so many things here in the United States from China. Some people think this just started after 2020. Well, it got much worse starting in 2020 with all the supply chain issues. We saw a lot of the big companies, a lot of the big manufacturers use the excuse of supply shortages to raise their price and basically just a cover for them being more greedy. So there's a lot of ingredients here. It's not any single one thing that you can point to causing this cost of living crisis. But we do know that 60% tariffs on China definitely is going to be even more inflationary than it is deflationary. Now, I'm not saying that the alternate candidate is going to be any better. There's pros and cons of each candidate. That's why I've tried to pretty much stay out of the political game because often I feel that the political choices we have are pick somebody that's really bad or somebody worse. But then it depends on what you're looking at. In some areas, the candidate that you think might be better, but in other areas, they're bad, right? So to me, it's just too many bad ingredients coming in from both sides to try to pick any side. That's why I've always tried to stay neutral and just look at the specific topics and the specific consequences and how it impacts the economy versus saying this person good, this person bad. Anybody that says that, I think they're pretty silly to say that because if you look at both sides have huge, huge problems, and I think they're both part of a system here that's caused us to be having to rival this or having to face this cost of living crisis here in the United States. And you see similar policies around the world. All right, but let's get into some other news here because we're preparing here in California for a monster storm. And here's how the LA Times put it: monster storm forecast worsens for LA, the danger zones, the forecast, the warnings. And some of the numbers coming out of here are pretty scary. California deluge is set, threatening, quote, bomb cyclone to bring hurricane force winds and dump 8 trillion gallons of rain with 37 million residents under flood warning. Folks, there's only 40 something million here in California, the total population. And so basically, almost everybody's going to be under some sort of flood warning. And here's the really scary part: hardly anyone carries flood insurance. I know I don't carry it. And anyone hoping for a housing market to crash here, for home prices to come down, what's going to happen when millions of homes get destroyed? I'm not saying it's going to happen, but if you believe some of these news reports, this could very likely happen if this comes true. And with all these homes being destroyed at once or in a short amount of time, that's going to be very, very inflationary because you're going to have all the demand all at once for all these rebuilding materials. You're going to have shortages of materials, shortages of contractors and people to rebuild these homes. And that could really cause a surge in demand. And therefore, you're going to see much, much higher prices for homes. And so this is not good for anyone hoping for a lower cost of living, especially here in California. But if you look across the country, similar things are happening, right? The amount of destruction to homes is just outrageous. And, that's part of the equation here. Of course, we have higher interest rates. We have money creation like we've never seen before over the past few years, especially causing a big surge. We have corporate greed, corporations using the excuse of supply chain disruptions ever since 2020. But when you look at their bottom lines, they've exponentially increased their profits. So the amount of cost increase and cost of living increase that we've witnessed here in the United States was about much more than shortages and supply chain disruptions. Right? It's a big, complicated kind of web of details to look at here to try to unpack, everything that's led to this point where we're at right now. Also, let's go over here to visualist capitalists, and we see, as far as imports go, we do import a lot of stuff from China, and you can see China is the world leader in exports. They're exporting to many countries, including the U.S., and they're at $3.6 trillion. If you look at the United States, we're at 2.1 trillion, which is actually still pretty good. We're still the second largest exporter in the world behind China. And considering that China's population is about 4 times of what it is here in the United States, 2.1 trillion is still not that bad. We look at Germany, it looks like they're a close third at $1.7 trillion. Now, why do I bring this up? Is because a lot of people think that all the jobs have vanished here from the United States. A lot of them have, because companies, they want to manufacture things in countries with a much lower cost of living so they can pay lower wages. And you look at the greed, the corporate greed that's come out here in the past few years. Look back since 2020 at the cost of living. It's about more than just the shortages and the higher interest rates. It's a lot of it was about greed. A lot of these companies use the excuse of the supply chain shortages or supply chain disruptions slash shortages. They use that as an excuse to keep prices high. Now, initially, yeah, there was huge disruptions in the supply chain, and we saw a spike in prices. But then, as companies noticed that people were going to be given money, and all the money that was pumped out into the economy, the banks still kept loaning out money. They didn't pull back on the lending for the most part. Companies refused to drop their prices, right? So if you're a car dealer and you still have people coming in with borrowed money buying your cars, why would you ever drop the prices? So this all goes back to the system of money lending, the banking operations, that have helped keep this cost of living just elevated. And the reason why we haven't seen a massive bout of deflation and why we haven't seen the cost of living really come down that much. A couple areas, sure, prices got cheaper, but those areas were areas where things were financed. Homes came down a little bit in some areas, not all areas. Automobiles came down, but when you factor in the higher interest rates, people that are financing these things actually are paying more. So you could say there's some deflation in car prices and maybe some homes here and there, but overall, if you're financing these things, they're going to be even more expensive, right? And we predicted this. Now, if you go back to my videos in 2018, 2019, back then I was predicting deflation because they were raising interest rates, and we saw a lot of uncertainty happening. But I didn't expect, and actually I was right though, because if you look at 2020, we did have that brief collapse in the economy and the markets. The stock market came down almost 40%. What I didn't expect was that we're going to create close to 50% of all money in existence was going to be newly created and pumped into the economy and cause so much inflation. So the collapse was followed by a very, very rapid recovery, and even the stock market recovered very, very quickly. And so that's one thing I got right, but then I kind of underestimated the amount of inflation that followed, and we're still seeing it to this day. We still see prices go up, and of course, they're talking about rate cuts. So what's going to happen if we have the tariffs? If the Don wins, if we have the tariffs that we talked about at the beginning of this video, if we have rate cuts, which enables people to borrow even more money, we're going to see inflation here like you might have never seen before in your life. It could get even worse than we've seen over the past few years. I hope that's not the case. I hope for the better of the two scenarios. I hope for deflation. But usually when you see deflation, you see massive job losses, because deflation typically is an indicator of the money supply and the money lending really being restricted. And I just don't see the banks doing that unless there's some sort of crisis. If they can't contain the banking crisis, if they can't keep these banks propped up by having one bank rescue another bank. We just saw that here recently, where a bank in 2023 that rescued a failed bank, or that bought up a failed bank's assets. Now one of those banks in trouble. That's New York Community Bank, and they had loaded up a lot of the assets from the failed Signature Bank. And now we're seeing the rescuers and the banks that are doing the takeovers of these smaller banks, or the cleanup. We're seeing some of those banks now start to get in trouble. But what's likely to happen is you'll get that bank that rescued the other bank that's now in trouble bought out by a different bank. And pretty soon, I think there's going to be a lot of consolidation at the big five mega banks, the Cities, the Bank of Americas, the Wells Fargo, the Chases, etc. And instead of a banking crisis and a lot of banks going out of business, you may see banks go out of business, but likely they'll just get bought up by bigger banks. So, in other words, the banks are still going to be able to loan out money because there's going to be a select few mega banks that are going to stay operational and stay alive no matter what. And this is highly inflationary. Now, why do I talk about this? I think we need to prepare for this, and you might want to think how you're going to navigate, these waters going into the future. Now, some people say, "Oh, I worry too much. I shouldn't talk about these things." Well, this is what the financial economic news is you're looking at all these things: the cost of living, manufacturing, the money supply, money creation, inflation versus deflation, prices, right? So we have to think about these things. That's what it is. And I'm not so much concerned for myself. I think I'll do all right considering the way that I've been preparing for this already, the investments I've made. I'm more worried about the younger people in this country. I'm worried about my kids. I'm worried about your kids. If you don't have kids, nieces and nephews, just the younger people in general, I think are going to have a really tough time growing up in this. And look at how many people already live at home. It's close to half of millennials. I haven't looked at the latest numbers, but the last time I checked, it was close to 50% of millennials are still living at home with their parents. And if you look at millennials, some of these people are in their mid 30s and they still can't afford to move out. The ones that do move out, very small fraction of them can afford their own home. A lot of them have to get roommates. A lot of them are buried under a huge mortgage. So, it looks like it's debt servitude to infinity, as far as I could see when you look at the cost of living. I hope I'm wrong, but please let me know what you think about all this down in the comments. What do you think about the possibility of these big tariffs? What do you think about the money creation? The United States still being the second largest exporter in the world, and that's because we still have the world reserve currency. But remember, that's dwindling, and there's a lot of countries out there going against the United States dollar reserve status, and we're likely to see more jobs exit. Now, the government, they're coming out and saying we're going to fund a bunch of new factories, specifically chip factories. But think about this: is more manufacturing coming to the U.S., is that going to be deflationary or inflationary? I think it might be inflationary because the cost of living here is so high. These manufacturers of chips or whatever we decide to manufacture here, they're going to be forced to pay higher wages because the cost of living here is so high versus paying wages in some third world country somewhere where people are working for pennies. So more jobs coming back here to the United States actually could be inflationary. It could be much worse than importing things from some of these other countries. But then again, if you have a huge 60% tariff on China, you have to think about that as well, right? So a lot of different things to weigh and try to piece together, folks. A lot of different things to keep an eye on and think about. Or maybe we shouldn't think about this. Maybe I should just make this a sports channel, entertainment channel where we talk about Taylor Swift dating the tight end from the Chiefs. Are the Chiefs going to win the Super Bowl? So we could see, the tight end, whatever his name is, Kelsey, kissing Taylor Swift after the Super Bowl. Maybe I should just think about that stuff. And anyways, let me know what you think down in the comments, everybody. Big love. Keep stacking. Bye for now. Peace.